Tim Quast, good morning, sir.
Good to see you guys. Happy Monday to you. And Spencer, I owe you an apology. I think I was supposed to be with you on Friday.
Yeah, that's
and
all
I
right.
was in an aircraft at that moment.
I figured because you didn't respond, I was like, he's doing something busy, he's indisposed or whatever. So it's all good.
We were down catching the Rolling Stones and Zach Brown in Atlanta, along with 50,000 of our closest friends at the Mercedes-Benz
Stones
Stadium.
are in town tonight.
Are they?
They're in the
Well,
D?
E?
I'll tell you.
Yeah.
Shoot.
Wow.
The rest of us have no excuse after watching Mick Jagger and Ronnie Wood and Keith Richards do their thing for an hour and a half. And they're my mother's age. And here's Mick Jagger running down the stage. He's skipping. He's jumping around on one foot. It's crazy.
How old is he now, Mick Jagger?
I think he's 78, isn't he?
Oh,
78 years old.
What?
Yeah, he is, and he hasn't, and he's not pitchy. I mean, if you listen to his recordings in the 60s and now they're all the same as identical. I was shocked at how good they were. So that's what I was doing. And that was, so the after effect and the aircraft, blotted out any thought of Friday Benzinga with the
That's all right, Tim.
Do you know why they sounded so good? Because it was probably like a pre-recorded concert.
Come
They were just listening. Yeah, they do that stuff all the time, Dennis. Don't be naive.
No.
But Zach Brown, I mean, that would have been great. I love Zach Brown.
We do too. This is the
Oh,
third time
country.
we've seen him.
All right.
Yeah. And
Market structure.
Well worth it.
Joel,
Plus one other little tidbit, because this is the two things come to mind, and I'll precede it with this. It's I love these sayings from the Proverbs: desire accomplished is sweet to the soul, and then George Carlin: hard work is for people short on talent. So that's been my motto. You know that Market Structure Edge was the big winner of Best Day Trading Software at the Benzinga FinTech Awards.
Oh,
so,
congratulations!
That was reason for champagne in Atlanta. We were delighted. It was because I'll tell you, we put our shoulder to that wheel to the best of our ability. And so thank you guys, and thank the Edge Mob, #EdgeMob for that. We're delighted.
Congratulations, Tim, on the win.
Where are you, Tim?
I am in Denver at the moment.
Back to Denver.
I'm in the Modern IR offices in Denver.
Oh, you're back in the office.
I am briefly. Yeah.
Oh,
then
you're
we're
never
off to
in the
Boston.
office. You're always like mountains in the background.
Exactly. I haven't been to Steamboat in weeks because we've been all over the place. And we'll be in Boston this week, then in Charleston, then in Austin, and finally back in Steamboat, I think about December 8th. So we've got a bunch of ground to cover. Anyway, I heard Tesla. Is that what you guys?
Yes.
That's what Joel
Market
wants to talk about.
structure.
Yes.
Okay, I saw you were talking about Big Lots. You were talking about Oatly. Let's see.
Well, Joel wants to ask about Tesla, I think, because we're wondering what it does to the market structure when you have a whale among whales in the market with you.
Right.
Selling.
Okay. So
yeah.
So and it is informative because you can. It's a great lesson on how the market works, the supply chain of the stock market. So this is Market Structure Edge, and if you have you folks who use it, we talk about supply and demand all the time. So that's what we're looking at. We're looking at demand on the top, supply on the bottom. I'll briefly explain that. If you want to join along, go to marketstructureedge.com, hit request free trial, put your name and email in, and you can follow along. So what we're looking at is 30 trading days here for Tesla with demand, which is an algorithm that takes into account the various behaviors that drive. There are 4 big reasons people buy and sell stocks: the story, the characteristics, the short-term prices, and its association with a derivative. That's really what it comes down to.
Wow,
So
I've never heard that before, actually. I want to write that down.
Did you say that again, Tim?
Yeah, say that again. I've never heard that before.
Okay,
4
so
reasons.
people buy and sell stocks for the story,
Yeah.
the characteristics,
Yeah.
the short-term prices, and the association with a derivative. So that's puts and calls and swaps and other contracts for difference. That is it. That's the summation of demand. And those things fluctuate. And it's why we pay attention to month end and options expirations, because those purposes fluctuate. And then the supply side in the stock market today is borrowed or created stock, short volume. So here's the interesting thing. So look what was happening to the supply side in Tesla right before the stock drop. So everybody, all the market makers probably for Elon Musk are already working this transaction. So they short the stock. So why? Because they can offset their risk. If they're a riskless principal, they're not going to front run the trade, but they can offload the risk associated with working the trade for Elon. And so they short the stock goes down, and they cover their exposure. So short volume goes up to 54% and then drops all the way down to 41%. What's a huge swing when you're talking about a stock that trades at times $50 billion of stock a day. It's a crazy amount. And then here's the demand side. So demand was still very strong at the same time. But when you have demand at the ceiling and supply rising, get out. It's one of the classic lessons of market structure. I look at it now and say, this isn't so bad. I don't think Tesla is about to fall apart. I think that equilibrium is very close here, and probably sentiment turns. And so if you're watching that as a trader, you want to know, when does demand begin to rise? And if supply remains low, the price is going to rise too. It's that simple. So I think that's how the market absorbed a massive known event. Elon Musk selling at least $7 billion of stock, and I bet he sold more than that. I bet he probably did 10 billion, just like he said he would. And it's come out in pieces, but it all probably happened right here, because that's how these transactions work. If Pfizer wants to repurchase a bunch of stock, Goldman Sachs goes and buys $5 billion like that. And then that process works its way through the market, accelerated share repurchase.
And there is a delay, and Tim's correct, there's a delay on the filings, obviously, when they hit. The Friday sales, Spencer, do we know, that hit Friday night, do we know when those sales, just to talk Tim's point, do we know when those sales actually occurred on Tesla?
Let me look, let me check it out.
Yeah, so it's Friday night is when it reported.
It was, no, it actually, the filing says Friday, the date.
So that one came out really fast.
Was Friday.
Yeah, that one came out really, but we know on the original one, we didn't start seeing filings until Wednesday, and it was for Monday. Right. So they don't always hit that quick. That one did hit quick.
We've looked at this in literally scores of activist situations where you have a required 13D filing that details when you bought or sold things. And then we go look at the data and say, well, it's impossible. It had to happen before, because the market couldn't absorb these things. And that's okay. That's not ill. There's nothing wrong with that. That's how you use a prime broker to help you facilitate a transaction. Prime brokers are brokers who will provide a range of services, capital, execution services, and so on. And they're going to work that in a broad-based fashion. And then you report it, right? So these transactions occurred. Well, there's not a perfect match to those things, but you can see it. Traders, you can see that stuff coming. If you see this event and there's news, that's time to go, because it's already happened. You're going to see that divergence. That's
Can I ask you a question here, Tim? Yeah. Why can't someone make a market? Like, this is when I like Goldman or Morgan, I won't mention any firms, like they'll come in and they'll say, hey, I'll do this. I'll do everything at 950. Right. Everything. I'll clean you up. I mean, does he have to do it? And all of a sudden you see this huge print, or it'll have to be like 9.25 or something like that.
So nobody's making a market on 10 million shares of Tesla. No. So there's no market maker that's going to absorb all that in one blow. So that works, when you're selling $10 million worth, not 10 million times 1,000.
No, there's
that's the math.
Let's get tennis. I'll do it at 800.
I'll do it at and then we'll work it out in the open market.
Right.
Never leave our house again.
So Tim, bottom line on Tesla and the market structure, take us right back to our original question there. Obviously, we've seen the demand or the supply issue from Musk here. What is the market structure looking at now going forward?
Well, here's the thing. So demand is still falling. See that? This demand's returning to 5. But look at the supply side is also reverted at the same time. That suggests to me that we're very close to this. that somewhere around it's at 5.4 now, I think. So that's still above the axis of 5. We think of 5, and we just normalized the supply demand to a 10-point scale. That's all we did. So we could have a very simple way. Human minds like the idea of 10s. That anything above 5 is excess demand. It could stop at about, let's call it 4, and then reverse and rise again. These conditions to me don't predict that Tesla goes to 800. I'm not seeing that in this data. I could be wrong, of course, but I look at that and say ahead in the next week, price turns, maybe even in less time than that. Remember,
I think
options,
it could turn too.
Yeah, options expire Wednesday, Thursday, Friday this week. VIX, index options, and then triple witching. So people are going to look at that. I would as a trader. If I had any kind of muscle, I'd say, I'm buying calls. I'd start buying calls to move the price just so I can unload those calls by Friday. It's a possibility, and I think there's a setup for that.
All right. Is there anything else on your radar for the week, Tim?
Well, so I think in the same vein, we should talk about this great surge. And I tweeted this stuff Monday. I said, look at EV. You look at the supply-demand balance and the whole of EV.
Yeah.
You could look at cloud computing. You could look at communication services. All of those things indicated gains. Well, all of that's gone away, by the way. So cloud computing, if you're in cloud computing, time to be out. Communication services, still room because the demand side's still strong, supply side's declining. EV. Here's the interesting thing. I could just look at the whole overall portfolio. This is giving us the averages for the overall portfolio with 13 companies in it. Look at this. This is why EV surged. There was a massive departure between demand and supply. See how supply plunged and demand rose? Well, that portends a big surge. Now, sure, you could say this is the infrastructure bill. Yes, but you got a great setup that will tell you that it's coming. Now, where is it? Well, the supply side's fine, but the demand side's done. So if you get out of your EV and wait for the next time. If you've missed it, if you've missed the exit, just stay because that'll turn again. But that's that.
Well, the story's not going away. Its CV story is not going away.
No, and if you look at the top end of these, so here's QuantumScape, Fisker, Nikola, Lucid, Lordstown. They're all 10s, but look at their short volume. Save for Lordstown, shouldn't be in Lordstown. The rest of these, not bad. I mean, at 40% short, remember the S&P 500 is 43% short. So these EV stocks still have a tighter supply chain than the broad market. And unless and until that changes, I look at it and say there's still a good story in EV. Just don't expect the kind of 12, 13, 18% gains we saw.
Can you just explain one more time before you go, because we talk this all the time. Short volume, much different than short interest. Just I'll let you explain your data there on short volume, because you're talking about the actual trading of the market on a daily basis, not looking at what's being held short.
Right. Short interest is a 1974 measure, and it has not changed since then. So don't rely on a 1974 measure to tell you what to expect in 2021. Short volume is a 2009 measure created by FINRA to measure the amount of trading volume coming from borrowed stock. And believe it or not, almost half the volume does. And so
it's market makers.
Exactly. Because of that, we've talked over and over and over about the association of between the market making exemption from the short locate rules and meme stocks. Happen in car. You can see it if the market makers are not creating stock and demand surges, what will happen to price? It will skyrocket until those things adjust, and you can see that coming. So that's what short volume is. Vital measure today. It's one of the things we're really keyed in on. One of the things we've done with Edge is to say, here are the things you should find. The next step for us is for us to find it for you. Where are the divergences occurring between supply and demand that predict these outcomes? And it's very predictable. It's not perfect. There's no perfect solution. But all we're doing is saying, this is how the market works, and you can take advantage of that.
All right, Tim Quast joins us every single Monday for Market Structure Mondays. The link to his platform, Market Structure Edge, is up on the screen. It's also in the description. And check back every Monday for this segment with Tim. Tim, always a pleasure to talk to you.
Back at you guys
next week.